Here we go. Stocks by the numbers. Welcome back. I wanted to do a quick update here on this company that I looked at back in early 2024, all the way back here about 360, 370 a share. As you see, it immediately popped up to almost 6, pulled back to where it was, bounced around, but then it took a couple of legs higher, and you see it hit highs of $7.90. Recently pulled back a little bit, went green today, and could potentially be on the up and up, in my opinion, in the short term, but I do also like it in the long term. Let's go over it. So Vimeo Incorporated, symbol VMEO, listed here on the NASDAQ. There's a tech company. I'm sure a lot of you are familiar with it. It's a smaller cap stock. Company right now, 552 a share, up 6 cents, about 1% here on the day. If we look here, we can see a market cap about 900 million. The PE, in my opinion, could possibly be the only fundamental that could make this kind of viewed as potentially overvalued in the immediate short term, not really in the long term, because we'll get to the numbers in a second. But I just wanted to point out the PE sitting here at around 35, and if markets do continue to kind of do their little correction or sell off, whatever people want to label it as, obviously something like this could, see a little bit of a short-term bump, and then of course immediately pull back just because of the PE. But it's also a little more volatile than the market, as you see. Again, the beta, the overall volatility of the stock in relation to the overall volatility of the market. This is a little more than 2 times as volatile as the market. The EPS as of last quarter did come in light, as you see here, about 1 cent a share. Analysts were expecting 3 cents a share, but the revenue has been steadily coming in above analyst expectations since I first looked at the stock about 15 months ago. And you can see revenue of 103.16 million, above estimates of 100.59 million. So they beat that by about 2.5 million, or about 2.5%. But you can see the last quarter, look, you have a nice beat on the EPS, and the revenue, again, estimates were 99.5 million. They posted about 104.5 million. Before that, same thing, 99.5 million. They post 104. Before that, 100.4 million. They post almost 105. So you can see they're just slightly beating that mark, or at least meeting expectations for the most part. 102.3 million. They post 105.5. So what analysts were looking at when they reported earnings here, obviously, is the fact that the EPS came in light. They cited that some of their subscriber numbers were dropping, and they guided next quarter for revenue, I believe, of about 100 million. And as you see here, well, according to TradingView, it's showing 101.3 million. I believe analysts were looking for about 102, but they said about 100. So EPS miss and potentially slightly, guiding to come under next quarter's estimates. So boom, we chunked the stock down. And you can see we ran up basically to the bottom of the previous channel that the stock was in after the previous earnings report. We ran right back up basically to that bottom, and then we rejected. We started to drop. Looks like the stock wedged here, in my opinion, and now actually started to potentially break up and out. You can see we climbed out above the top trend line here of this potential wedge, and we hit this 20-day moving average, back-to-back green candles. So we could maybe be on the up and up. I'd say maybe about halfway maybe to this top trend line. So you can see maybe about 585 potentially. But of course, if it goes to the top of this trend line, you're looking at about like 6.25, 630, which, could be a quick 10, 12, 15% return. And we're talking, of course, in the shares. But in my opinion, overall, I do think the stock is undervalued. And you can see I just connected from the previous earnings when it broke up and out. I went from that low right after earnings day on November 5th, 24, connecting down to that bottom after this recent earnings report. That big drop there, that's that trend line cutting across. Here, actually, let me change the colors for you. So these, okay, just so you're not confused too much. And you can see this is the top line cutting down across those tops. So that's why even if we stay in this like long-term descending wedge, you can see that if we do happen to run up to even mostly near the top end of this range, you're looking at about 6 plus. So in my opinion, again, even for the short-term immediate trade, you could stand to make about 10, 12%, in my opinion. This is our key level, in my eyes, that the stock has to get above. Okay, so this is our resistance level. And what did I just want to show? Yeah, right. Okay, so this was also a previous resistance. I know it's kind of confusing, but I draw out a lot of trend lines, and I know it looks messy to people, and some people watch the videos and they're like, listen, this guy's good, but I would never do it this way. I'm so confused right now. And I completely appreciate that. Again, to each their own. We all look at different indicators. We all do it differently. But I will say, if you look here from this recent spike up, well, not recent, but back about mid-August 22, and you can see I connected to those highs there about third week of March 24, and that basically cuts right across near that top as well. So in my opinion, that's a key level to watch, but you can see that the stock was staying below that resistance level and then popped up 2 earnings ago. And then even though we dropped down here now, we're still technically above that resistance level. So in my opinion, that is kind of your low, maybe about 480, 485 maybe, because, it looks like a key range right there, so it could maybe even drop down to like 490 and then pop back up. But above this line here, in my eyes, is still bullish, and it may take next quarter to completely break it up and out, but it looked like it was starting to, and if the EPS didn't come in light, I think this stock would have been off to the races. And if we look at their numbers, you can see that this company essentially has very, very little debt here. As of last quarter, less than 12 million debt. You can see the cash on hand, 325.5 million, right? So the cash significantly outweighing the debt they have on hand. And if we compare this last Q4 to the previous Q4, you see something like the free cash flow, 10.76 million. The year before, slightly sub 10 million. Right? So that increased slightly year over year. Cash on hand as well, 325 million. This time last year, about 300 million. You can see the cash, 304 million, 310, 325, 325 and a half. Right? So the cash is healthy. And that's what we speculated as well in the past with a lot of these tech stocks, because people were wondering why the tech stocks might have been holding up a little bit better than a lot of the other sectors over the last several quarters. And the reason is because usually they have higher profit margins and they're more times than not sitting on a hefty amount of cash. So the disinflation, which is the rate of inflation, or the current inflation rates, or Fed funds rate, none of that really affects these types of companies as much because they have the cash on hand to maneuver around it. I know it could be, again, a little overwhelming at times, but debt minus cash right here, you can see we're still at 300 plus million. We have assets outweighing liabilities in both the short and the long term. The equity went from 350 million, slowly stepping up here to the high 300 millions. Last 2 quarters, 409 million, 408.8 million. The book value per share is about 2.5, so we're only trading a little over 2 times book value right now. And the 300 million in cash, 400 million equity, that brings us to 700 million. And if we come down here and look at how they closed out 24, you can see 417 million in revenue, 26.5 million net income, 6.33% roughly net margin percentage. So if we add those numbers up, now you're at about 440, right? So 440 million plus the 700 million we had is about 1.14 billion, in my opinion, quote unquote, fair value for this business. Market cap right now about 900 million. So again, this could be a situation where we could be early. As I said, you could see a little run up maybe coming out of this wedge in the short term, and then it drops and rejects back down to the bottom of this range. So you could see sub 5. So you might have a volatile ride over the next couple of months. So I just want everyone to be aware of that. But overall, I just wanted to rehash the numbers with everyone because we looked at it back here and I said essentially basically the same thing. I think it's undervalued. And you can see that even though we had some pops and drops, we did essentially see increased value from the time we decided the numbers look decent and it could be viewed as undervalued. You understand? So that's why, in my opinion, I like looking at the fundamentals, and I just think it eliminates a lot of the guesswork and it eliminates a lot of the stress. And if you go back throughout the channel, again, is anyone going to hit, 100% or bat 1,000? Of course not. You and I both know this. But if you find a way to be right more than you're wrong, and looking at a situation like this back at whatever, sub $4, if we looked at the numbers and we kind of quote unquote know, essentially, if we have like a 90% conviction, let's say, that this stock is undervalued and it should be climbing under time, then believe it or not, it more times than not will eventually come to fruition. Which is why I know we all want to, analyze a company, we want to watch a YouTube video, and then we want to jump in and have it immediately run up. But you and I both know sometimes it doesn't happen overnight or over the next week or two. Sometimes it takes several months. And something like SoundHound, something like Fubo, those stocks are perfect examples. We were all over those stocks, constantly updating them. People constantly commenting, asking in the Discord, what's going on? I thought something would be happening by now. I've been holding this for a while. Boom. And then all of a sudden, something like Sound squeezes, it explodes. Then the stock's at 12. It's at 15. It's at 20, right? We were looking at it back at $2, $3 a share. Same thing like Fubo. Again, it was hanging out between $1, $2. Some people liked it, some people hated it. We saw the value there. People got impatient, and then boom, Disney steps in. All of a sudden now they're merged with Hulu. The freaking stock jumps up to $6 a share. Meanwhile, it was all you can eat back at, $1.20, $1.45, right? So that's why, in my opinion, I think that this is the simplest way to do it, is by looking at the fundamentals. And again, will you be potentially early? Yeah, it could happen. But that's why I also used to say that when we find a good position, you begin to piece your way in when we like it, so that if it works out, great, you made money. And if it climbs a little and then rejects lower, you can add to the position, lower the cost basis, continue to accumulate shares, and then hopefully over time, as it runs up and breaks out, you're going to look back and you're going to say, wow, I'm so glad I added. I averaged down. Now my cost is $5.20. The stock's up here at $7.20. Boom, it looks great. You understand? Let's check some recent news here. Vimeo named top 5 brand in video leadership. Okay. Vimeo execs make significant stock purchases. What's this? CEO, 100 grand. CFO, tech officer, 100 grand. Director, 100 grand. Okay, so they started buying into the stock, essentially right where the stock is right now. I know this was reported about a month ago, but you can see CEO acquired 18,500 shares roughly at $5.40 a share. So only slightly less than where the stock's trading right now. CFO about $5.41. Okay, 538 roughly, 531. Okay, so they caught it. Okay. Actually, it looks like a pretty key level there, about 5 1/3. And you can see that's kind of where the bottom potentially of this wedge hit. You have the fib level there as well at about 530. And you can see we prematurely, we didn't hit that apex, but you can see we came down right to that key level, and then that's where the breakup and potential breakout started to happen. So in the short term, you could continue to see more movement, but in the long term, I do still like Vimeo. Oh wait, hold on, is there more news? Truist adjusts price target on Vimeo to $8 from $9, keeps buy rating. Again, this was the day after they reported these earnings. But again, price target, even though it was lowered, it's up here at $8 a share. That's why I'm saying to put a price target of roughly $7, $8 really should be a layup for something like Vimeo. But again, technically they lowered the guidance going into this next quarter, this next May quarter. So what you'd really want to see is, of course, a little surprise beat on the top and bottom line, and that may pump it right back up there to about 6.5 and potentially break it up and out. Vimeo sets focus on growing self-serve. What is this? Self-serve subscriber. The company, which targets double-digit growth in revenue by the end of the year, says that one of the trends that supports this view is that even though it rolled out price increases across more than half of the business, it was able to bring its average order value up in the double digits rate. Quote, while we know we still have work to do in terms of bringing the subs numbers back up, those average revenue per user increases are really helping us in terms of where the bookings trajectory is going in that business. Vimeo doesn't provide an outlook. Shares fall. Let's see here. Drop in profit. Subscribers fell. Guided for lower revenue. Net profit 1.5 million, 1 cent a share, compared with almost 8.5 million or 5 cents a share from this time last year. So again, the EPS, yeah, they were looking for 3 cents. They posted 1 cent, but again, technically, they did beat on the revenue. Revenue fell to 103.2 million, was 105.5 this time last year, but beat the 100.6 million. Vimeo most recently got it for revenue of 100 million. Company said that Vimeo enterprise revenue, rose 37% to 23 million with bookings. The fixed fees for software services that subscribers have paid or committed to pay, increasing 39%. Its self-serve and add-ons units saw an 8% drop in revenue to 65 million, as well as a 6% decline in bookings to 64 million. Vimeo is forecasting revenue for the first quarter of 100 million, with full year revenue expected to grow in the low single digit range, meaning like 2-3%. Wall Street anticipates first quarter revenue of 102.9 million. See, they said about 100 million. However, again, we've seen that even as of last quarter, the company's able to, 1, 2, 3 million and change come in above these expectations. So they're saying 100, they were looking for just under 103. So for all we know, the company might come out and post like 103 and change, right? So, we will cross that bridge when we get to it. 2025 top line performance of 423 million, up 1.5% from 417 million in 2024. Well, 1% is about 4 million. So 2% would be about 8 million. 8 million plus that would be 425 million. So they're looking for about, what's that, like 1.6, 1.7% growth? Which is low. But of course, if they're able to report in line or above those expectations, then technically they're doing it correctly. Video served 1.2 million subscribers, down from 1.5 million only 2 years ago. Okay, that's a big span though. 24 months we're looking back here. Over the past 48 months, Vimeo has seen its subscriber base across its main business squeeze in every single quarter. The 2,000 growth in enterprise subscribers seen in the latest quarter wasn't enough to offset investors' concerns about its business model. Its guidance for a first quarter drop in revenue suggests this trend will persist. All right. Understandable. Again, it's similar to almost like when we look at the telecom stocks, right? Like they might come in and like EPS might be in line, revenue might even beat a little bit, but again, something like Verizon or an AT&T, if they see the mobile subscriber numbers drop slightly, then they'll bring the stock down. So sometimes, there are certain metrics we tie these stocks to, but again, technically, if some of these numbers did decrease, I'm not necessarily saying the stock shouldn't have dropped. I'm just looking at the longer term outlook, saying, in my opinion, the stock is easily worth $7, $8, if not eventually seeing double digits, which of course, from even this level, could show you, any, 70, 80, potentially 100+%. Gross profit. Wait, hold on. Right, okay. Gross profit 326.3 million. Gross profit saw a slight increase, primarily due to a reduction in the cost of revenue. Okay, that's good. I mean, if they're already anticipating a slight drop in revenue and subs, if they're keeping their costs in check, to counteract that, then I guess technically that's a good sign. Because that might mean that even if revenue is dipping down, that might mean that the EPS miss that we just saw might just be like a one-time thing, and they might be able to beat on EPS next quarter. Operating income 18.7 million. Operating income rose by 5.6 million, driven by the increase in gross profit and a $5 million reduction in operating expenses. Net earnings 27 million. Net earnings improved due to higher pre-tax income and the impact of stock-based awards. Okay. Enhanced profitability. Okay, the segments. US remains Vimeo's largest market. Yeah, only slightly though. It's that like 60-40 split. Serves a diverse range of customers. Vimeo anticipates an increase in operating expenses in 2025 as it plans to continue investing in product development. The company expects the secular trend of video proliferation in business communication to drive further demand for its services. Okay. Terminated its $100 million revolving credit facility in June 23. Acting managing its capital through a stock repurchase program, repurchasing 5.9 million shares of its common stock in 24 at a total cost of 26.8 million, which is what, like 7% of their current cash on hand. Additionally, subsequent to December, Vimeo purchased an additional 1.5 million shares for 9.7 million. The company has $13.7 million remaining under its share repurchase authorization as of February 13th. Vimeo's cash increased $325 million with no outstanding debt. And I always say, again, is it absolutely perfect across the board? Does it tick all the growing business boxes? No, currently in its current state, it does not, which is why I'm saying it could still remain volatile. However, you see the trend of the type of stocks I bring to you. Most of the time, they're beating earnings consistently, or they're, expected to grow and enter new markets like we saw with something like SoundHound, or they're just, undervalued in the numbers, and over time, we're going to potentially have a nice grower on our hands. But I wanted to do an update on this because I do still like it. It's just my opinion. We'll look at stock charts real quick. I'll let you go. You can see the RSI on the daily at about 43, and the stock pulled back. You can see it danced around that key level that we looked at, not only at the price action here, but also you can see we're bouncing off this 200-day moving average, which has been steadily climbing over the last several months. Nice bounce here, mid Bollinger Band 555, stock closed at 552. But again, I was looking for that fib level, potential climb to about 585, remember? Top Bollinger Band, 588, right? With the 50-day moving average potentially back to 611. And that would really still be kind of just on its way, if you want to go back here from earnings day, that would really just be on its way filling that gap, right? So that's why in the short term, you could see more momentum here. And even though the stock dropped down, it had the initial drop, and you can see it flattened out as we tightened in the wedge. And then you can see the MACD recently crossed to the upside. So that's why we might continue to build off of that momentum. RSI isn't overextended. Check on the weekly. RSI essentially same place, sitting there at about 46. The 50-day moving average fell down bigly with the stock, completely flattened out, right? This is where we started to look at it, early 24. And you can see now, second half of 24, going into 25, 50-day moving average starts climbing from about 380, it looks like, to above $5 here at 512. So I was looking for a potential bottom of that wedge range at maybe like 485, 490, but it might actually hold 5. If it does have a run up and then kind of an immediate rejection, your low might only be about 512. But you can see how this bottom Bollinger Band is now coming up, and we're starting to get the tightening on the weekly Bollinger Bands as well. And again, for the most part, was it a little bit of bad news out of this quarter? Technically, yes. However, overall, I think the stock is undervalued, which is why, believe it or not, I think it makes this long-term kind of U recovery and gets back up here to $7, $8, $10 a share. I truly do believe that. Almost similar to what we saw. I mean, it's a rough comparison, but I'm just talking the chart movement, kind of similar to what we saw with PayPal. Remember PayPal? They beat it up, they brought it all the way down. Didn't make sense in the numbers. Then it like flattened out, and all of a sudden it started to curl, and it climbed back up $70, $80, $90 a share. Then it was hitting highs. Then now it's back on everyone's radar, right? Literally what I said was going to happen. They take the spotlight off of it, scare you out, scare the traders out. Then when no one's looking, that's when they start inching it up. 1-2% at a time. Remember, they can't chunk everything up 10-12% because then it'll get trending. Then you'll all jump in. So they don't want to get it trending. They just want to slowly, under the radar, like I always say, that's when they want to rebound the stock. That's when they want to grow a stock like this, right? How many people talk about Vimeo? You know what I'm saying? But technically, as I said, we found it at $3.70 and the stock hit almost $8, right? But no one talked about it. That's why I like it as well. Let's check the pivot points. I'll let you go. Pivot point here on the weekly, you can see it'll have to test that 512 moving average before it would potentially break down to that support level of 409. Next pivot point on the way up, 599. So that's why, again, the 580 range to potentially even $6 could be incoming. Above that would be about 8.5, so that would take some time to get up there. Let's check the daily. And you can see, yeah, low fives as well, right? So you have that moving average at 512, and you have this support pivot point on the daily at 510. So that could potentially be your downside. And of course, you have to keep an eye on that 200-day moving average as well, 537. But you can see the next pivot point here as well, 603. So it looks like we have a lot of action at around like 585 to like $6. And with the MACD just crossing, in my opinion, I think it steadily gets there. Technically, the MACD dropping on the weekly time frame. But again, we know that the traders are probably seeing that the RSI didn't pop up too much. And if we're breaking out of this wedge, and if we have the MACD cross, and if we just tested the 200-day, which is rising, and we tested it a few times, but we bounced off of it, then they all might be looking at something like this as bullish momentum. Boom, let's bring it up, make a quick 10%, bring it up to 6, in and out, bang. So in my opinion, I think that's what's going to happen. So I technically like it in the short term and the long term, but this is again another name that people might not be familiar with right now. It's, you know, a small cap stock, less than $1 billion market cap, but again, where there's value, that's what we have to potentially look at. Right? Whether we're looking for a trade or we're looking for a stock to buy for the next year or two. You want something that will, again, high conviction. You can't use the word guarantee because we know nothing's guaranteed, but you want stocks that are the closest to a quote unquote guarantee, right? That's why, again, something like a PayPal, brand name stock, good fundamentals, beaten up down to new lows, $60, $50 a share. Great, perfect. That's exactly what you want. That's exactly what you want. That's when you buy, start to build a position, just tuck it away, add to the position, and then give it some time. Don't look at it, and then boom, before you know it, you're up 25%, 38%, 48%, right? So yeah, that's pretty much it. But I just wanted to update you on Vimeo. I'll end it there. Once again, stocks by the numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm. Ooh, nice bike going by. Thumbs up algorithm, right? All that helps me get more eyes on the channel. And of course, subscribe to the channel. That's our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.